Three, two, one, zero. Ignition. Liftoff.
Good morning, good afternoon, and good evening. My name is Nick.
And I'm Yuri, you're watching Moontower HQ.
For this week, we want to look at the KuCoin hack that currently happened, and over $150 million worth in Bitcoin and other assets were taken. But I think going into talking about the hack itself might not necessarily provide too much insight for our viewers because, well, you can go on a lot of different websites and read about exactly what happened. What is interesting is two aspects of this hack and how those particular aspects can expand in the future to a form of censorship, very similar to what we currently are seeing in social media with cancel culture. But before we get there, one of the interesting things about exchange hacks is its history. In Bitcoin, predominantly, when exchanges used to get hacked in the good old days, one can say, most of those hacks, it is speculated, actually came from an internal source. And what I mean by that is it wasn't actually nefarious actors who were penetrating the system and then taking these assets and then leaving, but it was actually the companies themselves orchestrating what looks like a hack in order to actually escape a business that's often failing or that has certain regulatory pressure in their area that they just simply cannot comply with and they need a way out. For lack of a better term, exit scamming. Yuri, can you tell us more about how the process of exit scamming might look like for an exchange back in the day?
Yeah, well, I think we can only speculate right now because obviously very, very few of these cases have actually been proven to be exit scams. But it does make sense to speculate on this topic because if you can imagine that you run an online exchange, which is it's basically an unregulated entity that is not responsible for any kinds of disclosures, no accounting procedures, no reporting to the government, none of that stuff, and you are essentially running a successful venture which is growing like a like a DAO in a pot, or raising all the time. It's growing in terms of its monetary value because people trade all the time, and the more trading pairs you add there, the more trading fees you can collect when people trade with each other. So exchanges like this, they grow pretty fast, and if they pull off something very successful, some kind of a very successful model like what Binance did, and they literally went to from zero to a $1 billion worth company within 7 months, if I'm not mistaken. Exactly. This is in parentheses because we know that exchanges, these unregulated exchanges, can inflate their volumes by either faking them outright or by doing what's called wash trading, which means I have a SOC account and then I have another SOC account, and these two accounts trade with each other, although it looks like two different users, but it's actually me trading with myself. Obviously, I put zero fees to myself so that I can just execute as many trades as possible. And because the exchange counts the volume, the trading volume based on all the trades that happen among all the users, so obviously you are bumping up your numbers big time. So this will be the way to inflate the numbers, and these inflated numbers attract more users to your exchange, because what users are interested in and what the professional traders are interested in is how much liquidity the exchange has, how deep the order book is, and how much volume is traded daily. So, because if you want to trade $1 million, let's say every single day, you're not going to go to an exchange that trades only $200,000 worth of Bitcoin daily, right? You're going to go to an exchange that trades many, many millions per day, because with your 1 million, you can already move the market on that exchange, and you don't really want to do that. So these exchanges, they just sit on all this money, and all of that money is Bitcoin, or other cryptocurrencies if they support many other pairs, right? And what we know about Bitcoin is that the Bitcoin transactions are irreversible. So if you, it's literally like cash. When you send a Bitcoin transaction, you cannot take it back anymore. It's just sent, it's gone. So if you can imagine, you, the more, the bigger the value that you sit on as an exchange, the more incentive there is, not only for you as the founder of an exchange, but for anybody on your team who has any kind of access to the systems of the exchange to actually just take all the Bitcoins or take all the other cryptocurrencies, just run away. Because let's say you're sitting on $1 billion worth of cryptocurrency on an exchange. Well, you know, you, what's your incentive like, right? You're counting, and you're some kind of a technical guy who has a salary of let's say $70,000 per year, right? Well, how many years do you need to work to earn $1 billion with a $70,000 salary? Many, many, many years, right? It's just worth for you to devise a clever plan to actually infiltrate your own systems and just, you know, snatch the Bitcoins or a portion of Bitcoins wherever you can, which will be a lot more that you can make being a salaried person anyway, and just run away. And you can do that either by running away, or you can blame it on someone else by essentially engineering this attack in a way that it appears that it was an outside hack, although obviously you're the one who, you know, provided all the intricacies of how the system operates. So I think because of that, it is very, very uh, uh, it is the it's not wrong to assume that such hacks are actually done by people on the inside. And you know, with hacks from companies like Bitfinex, you cannot prove it. Bitfinex has been hacked like what, twice, I guess already, and those were huge amounts, $80 million worth of Bitcoins and even more. And you know, Bitfinex always came back from this. They just made a lot more money. They issued tokens that, you know, represented the value of the stolen Bitcoins, and then they bought those tokens back. And, you know, very clever scheme. But you just you have to think about whether this was all planned ahead, or it was actually, you know, an honest attempt to recover and their reputation. You know, they're still in business, and there's also other large exchanges out there. So I think you have to be very diligent when you trade on exchanges. You have to know the platform very well. You know, you need to, you know, have some trust in the brand as well. And I don't know if regulation itself can actually help with this situation, and that's exactly why, you know, a lot of people require a regulation, because apparently, you know, regulators can fix can fix human nature and just you know, put some rules, and then people will suddenly stop wanting to be thieves and to steal money. Right? No, it's not. Regulation just make it a little more difficult, and the thief will just have to be a little more creative than that. We can see that from the banking industry, where the biggest money laundering scandals happen, and the recent ones, again, with the same banks over and over again, in which they just launder billions and billions for drug cartels, for other, you know, illegal market participants. They've been doing it for years and years, and these institutions are extremely regulated. They are highly regulated, yet nothing really stops them from laundering the money. My guess, obviously, is that people in the government, people people who write those regulations are also in, you know, on the game, so they get a piece of the proceeds, and the eventual fines that these banks get are already priced in their profits, right? Like if you make 10 billion profits and then you have to pay a $500 million fine, that's like what, 9.5 billion in profits. That's still that's still great. You just count it in as an expense. That's the cost of doing business, right? Yeah, so I think you're completely right to assume that some of these things can be internal, but external factors also exist, and there definitely are hackers in the world. There definitely is a subset of population who see anybody who has any Bitcoin position whatsoever as a potential target, either today or in the future.
Yeah, and you're absolutely right. I think it's a spectrum, and that spectrum tends to lean more towards the side of, again, some type of malicious activity internal to the exchange, probably earlier on in the lifetime of Bitcoin exchanges in general, simply because it was a much more tightly knit group of not only exchanges, but also channels of payments between the exchanges and infrastructure and so on and so forth. So I think over time, as the space grew and matured, that you started to move the needle more towards the line of these being not actually internal exit scams, but fundamentally flawed issues in terms of the code of the particular platform or any kind of human error that might exist, that opens the door to phishing and some of the other types of attacks that could happen. What the interesting thing is, between this hack and what has happened in the past is actually Bitcoin's price reaction, in my opinion. I remember back in the day when Bitfinex was hacked, exactly as you were mentioning, the price of Bitcoin during that time slipped quite a significant amount, because the theory goes, once these exchanges are hacked, what are the people going to do that took these proceeds? Well, they can't really buy much in Bitcoin, the thought goes, so then they must convert it into dollars, and converting into dollars means dumping Bitcoin, and dumping Bitcoin a lot very quickly on a mostly illiquid market. However, this is no longer the case, and again, KuCoin is a prime example of it, where once this hack occurred, price didn't react whatsoever. And this, again, in my opinion, shows, I think, the strengthening of the ecosystem, the resiliency of it, and the growth of the infrastructure behind all of these elements in play. One of the thing that worries me, and this kind of goes into the topic similar to what you were talking about, there seems to be individuals in this world, predominantly in the traditional finance area, that are above the law, or at the very least are capable of utilizing the infrastructures that exist around us to go through the court systems in such a way as to minimize the damage done both to themselves as well as to the companies and operations that they run. And this speaks to almost the king class that is forming. And this is a topic for another discussion that is very interesting to me personally, but it shows a very big class divide that is predominant in high finance as well as in the global economy, where you have a group of individuals that can very much control, manipulate gold prices, for example, which JP Morgan Sachs is currently paying some ridiculous fine for, and things of that nature, where you can manipulate the markets, you can do money laundering operations and price those into your risk calculations, know that it's going to cost much less than you're going to earn and things of that nature, giving rise to this class of individuals who are very much operating under a different rule set than the majority of the public. If you and I were to do something similar to that, we'd be sent to jail immediately, and no amount of money that we could spend would dig us out. Yet they do worse things, and not only that, but they get promoted, they get raises. And anyways, going into that perhaps at a little bit of a different time, but the concept seems to go in such a way where you have a group of individuals that have a disproportionate amount of control over an ecosystem. In this case, we were referencing the global economic markets, but in the particular case of what's going on with KuCoin, it's actually more specified to our industry. So I'll read a little bit of an excerpt here that I found very interesting, which has certain implications for the long terms. According to Paulo Ordoino, sorry if I butcher the pronunciation, the chief technical officer at Bitfinex and Tether, the two entities froze $33 million in total. If early estimates are accurate and 150 million were hacked, that represents 22% of the lost funds. This is quite concerning to me, because while I'm all in favor for recovery of the funds that have been stolen and subsequently redistributing it back to the individuals whom it was stolen from, I start to get concerned when a company that is running more or less a centralized ledger in the form of the Tether blockchain to be able to freeze funds because they were deemed as tainted or they were deemed as illicit, therefore marking them in their system as tainted coins. This conversation goes back even into Bitcoin when the concept of color coins came about, which was essentially a way to have some type of classification for different types of Bitcoin and whether they were involved in some particular activity in the past or not. But this is censorship, right? This is financial censorship. It's a shame that those hackers penetrated those systems. It's a shame that those exchanges had centralized hot wallets that were honeypots for these actors. But I don't think it warrants this type of censorship. And this is what is concerning to me because it creates a precedent. Now, all of a sudden, and this is very similar to what was happening in social media and what is happening in social media with cancel culture, but you have a precedent where a platform, because let's not forget, Tether is still a platform owned by a private corporation, similar to Twitter, similar to Facebook, whatever the case might be. A platform can be influenced by outside parties, whether it be regulators, whether it be individuals, whether it be, again, this kind of king class, if you will, people that have a lot of control, to modify their existing capabilities in order to include or exclude certain types of people. In this case, include or exclude certain types of transactions. And if we were to fast forward the clock, well, we see where this slippery slope leads. At first, a government body might come into Facebook and say, hey guys, we don't want this type of hate speech content. It goes against the Constitution, so on and so forth. Please remove it from your platform. And Facebook thinks hard about it. They have a particular pledge, had a particular pledge to just be the voice, to just transmit the voice of the people without any kind of modifications. Well, now they're open to making a small modification to it and say, okay, this type of speech is no longer available. Well, then another party comes in and goes, well, we also don't like this type of speech that gets banned. And at what point do you stop? At what point as a company do you go and say, wait a second, we are so far down the line, we are now a censorship platform and removing people that should have a free voice. Very similar to what's going on and what can happen, I believe, in this case with Tether. While there are other options opposed to Tether in terms of stablecoins, Tether is still the biggest and the largest by volume. And this gives them a lot of power. And if they continue to use this power in such a way as to gradually open the gates for censorship, I think we're headed in a very, very scary direction when it comes to what can happen with stablecoins and kind of the community there. I feel that one of perhaps the biggest issues of this censorship creep is who the censors are going to be. Right now, if you read some of the articles of the agencies that predominantly investigated this, it was the three-letter agencies, right? It was the SEC, the FBI, and if they have influence, over Tether to a certain degree to force them into censoring certain types of transactions, what's to say that they can't start doing it to other corporations as well that are involved in the Bitcoin space? So I feel that we really need to make a transition from these types of centralized exchanges, especially not only just centralized exchanges, which I think is inevitable in certain cases, but exchanges that have such vulnerabilities and such control over the flow of funds. I think the user needs to be empowered. Again, as we spoke in our previous conversations, we need to start creating our own communities of governance, right? So very similar in the financial sense, we need to start creating tools and we need to start leveraging tools that allow the individual to have more power transactionally speaking. And that needs to be the way forward, in my opinion.
Yeah, well, what I want to add is that obviously competition is really important in this field. And if we want to still have these stable coins out there, yes, Tether is now the biggest company out there. And if you've been following Tether recently, just in the last couple of weeks, they have added another $5 billion worth of issued assets to their, to their books. So right now there's about $15 billion worth of tethers issued and in circulation. This is crazy because obviously, this stuff is in demand, and as we discussed before, there's all kinds of use cases for Tether, and I think the most and the best use case for it is actually moving money, moving fiat value around the world. But as you mentioned, they can become their own enemy essentially, because as they grow big and as they become as this value, fiat value, gets more centralized around one or two companies, regulators will come in and they will start really pressuring them. And unfortunately, these types of companies, while they do enjoy a lot of a lot of freedom and flexibility in terms of how unregulated they are, some of them can actually just succumb to the pressure that comes from regulators. And the biggest and latest example is BitMEX, which has been unregulated so far. It's a Seychelles company. Like you don't owe anything to anyone. You don't answer to anyone, right? It's your business. You run it the way you want it. But still, even though they are incorporated in an offshore territory, they had to succumb to the pressure from the regulators, and I believe from the American regulators most of the time. And they enabled KYC on their platform, which is completely, I think, it goes completely against their business model, and I'm pretty sure a lot of people will drop from their platform, and only the people and companies who are really, already kind of ingrained in this BitMEX infrastructure and are just used, maybe they already have all their systems geared towards BitMEX completely. Everything is written for the BitMEX API, and they will just keep trading, and and they're fine with complying with the KYC. Those will stay and trade there, but others will leave to other companies, and there's a competition already there. There's Deribit, there's FTX, there's Bitsy. There's other competition out there that is growing, and there's also there's some innovation happening in this field as well. With Lightning markets. It's a great example that allows people to create futures contracts using Lightning Network contracts, which are non-custodial. They have no accounts. They have no KYC. It's a really, really great thing. That's probably where things will be headed. One thing that regulators have to understand is that open source market solutions are much faster than regulators themselves. And as soon as regulators come in with another rubber stamp and just say, this is not allowed, the market will come up with a solution that cannot be enforced by that rubber stamp anymore, right? So this is what we're talking about here. And when I talk about competition in terms of stable coins, then we just have to understand that there will be other players who will see that this market is very, very juicy. There's lots of juice to squeeze from it. And if Tether is getting overregulated and a lot of people are not happy with that, well, someone entrepreneurial enough will come and create a more innovative solution for these people, maybe a solution that cannot be regulated in the first place, something more technological, right? And then we'll see how this will play out. I don't know what it can be. Obviously, sitting on a bunch of cash in your bank account and issuing stablecoin tokens that represent that cash is a huge liability. But sitting on a bunch of Bitcoin, on the other hand, is a completely different game, because you completely control your private keys. So things like synthetic stable coins that are backed completely by Bitcoin could be an answer to this. Actually, BitMEX themselves wrote an article about synthetic USD, which is essentially a perpetual swap where you short Bitcoin and lock in the US dollar value, essentially creating a synthetic US dollar. So it's not something US dollar that the government or the central bank created. You created it yourself by shorting against the value of the US dollar, but everything is done in Bitcoin itself, right? So the same thing. This synthetic U.S. dollar, if tokenized, essentially could be used as a stable coin, right? So you can just short a bunch of, let's say, $1 million worth of Bitcoin, issue tokens worth $1 million, right? $1 each token, and now you have a synthetic U.S. dollar. Or you don't have to use BitMEX or anything. You can just say, okay, I have this is it. I have 10 Bitcoins in my possession. I issue dollars against those Bitcoins. Here's the cryptographic proof that I still hold those Bitcoins. I can sign this transaction proving that I have these reserves every week, every day, or whatever it is. So you can see that my tokens are still backed, right? And if my reputation grows and I can, and my fiat stablecoin tokens start circulating around the world, then I have essentially I have created a synthetic stablecoin. I have created a business for myself. There is competition. There will be more competition. While I do think that the regulators will try their best to to stifle innovation, they will not be able to do so, and for the reasons that I just described.
Absolutely right. And therein lies the light at the end of the tunnel. The major difference between what's currently going on in the global financial ecosystem and what's currently going on with Bitcoin and the decentralized ecosystem when it comes to finance is the speed of innovation, is the ability for disruption. And because of technology similar to what you mentioned, as well as others that are coming online, and the open source nature of these types of projects often, you have a speed of innovation that outpaces regulation by orders of magnitude. And that's the one thing that I think we have going for us in this ecosystem as a way to hold back censorship, as a way to hold back the control of perhaps the larger influences in this world. And my goal is to continue to support these types of ecosystems, to watch them grow, and to see as many people as possible be, for better or worse, in terms of how I'm saying it, on the right side of financial history. So with that, we hope that everybody here takes the time to do their research, to understand what is happening, but also have a little bit of faith and understand that there are people who know and have devoted their lives to these ecosystems to such a degree where people can enter and not fear as much in terms of what might be coming down the lines in terms of censorship and things of that nature. So until next time, thanks for watching. My name is Nick, signing off.
And I'm Yuri. Thanks for joining us again. Until next time.